Digital Sky Technologies is starting a new technology fund and offering investors the promise of a stake in Facebook. DST, founded by Russian tech investor Yuri Milner, is looking to raise $1 billion for the new fund. This is the latest in a series of VC firms announcing new funds recently, including Andreessen Horowitz, Elevation Partners, and Kleiner Perkins Caulfield Myers. Let's head back to our Cory Johnson for more on this story. Cory?
Yeah, well, VCs are clearly picking up in activity, at least in raising money right now. The question is, what are they going to do with it, and why are they doing it now? Well, joining me now from New York venture capitalist Rick Heitzmann, a founder and managing director at FirstMark Capital, on the board of directors of New York Venture Capital Association as well. So, Rick, why now?
Well, I think in the last 12 months, you've seen a lot of exits. And you just mentioned LinkedIn is a $10 billion public company now. Zynga, which acquired another business today, is a $10 billion company. Groupon's a $10 billion company. And then you're going to see Facebook go public at what could be a $100 billion valuation. So as you're beginning to see some of those exits drive investor interest. Because you're seeing...
Explain that to me. So what do you mean? So because they haven't closed the funds, they can't say we've closed our last fund with a 20% annual compounded return. So what is it that draws whom?
Well, if you're, Kleiner Perkins was an investor in Groupon. Clearly, you have a number of funds, including DST, who are investors in Facebook, and they're saying, hey, we got this multiple return on our investment in a Groupon, a Facebook, a LinkedIn, and therefore we can really drive returns in a market that hasn't seen many sectors be able to drive returns over the last several years.
So what you're saying are that the endowments and the pension funds, when they see these big IPOs, they're like the much criticized retail investor. They pile in and they want to be a piece of it.
I wouldn't say they pile in because it's really the long view. I think you saw a little bit of a pause in the venture market over the last 3 or 4 years since the beginning of the financial crisis, as venture tends to be long-term illiquid investment, and people were scared about both long-term and illiquid investments over that time. And now people are starting to refocus on this as the IPO window has opened, and the top-tier firms are really starting to drive very impressive returns.
Well, let's talk about some of the firms that have recently raised money. Emily mentioned a few, but you've got Yuri Milner's group, and of course he's been involved in a lot of the bigger deals, not least of which with an interesting deal with Facebook. We think we've got a list of those deals. You've got Andreessen Horowitz getting in there. You've got Elevation Partners getting in there, all trying to raise new money. Why, do any of those in particular stand out for you?
Yeah, I think all of those firms did a really good job of looking at the last downturn, and when there wasn't a public market for a Facebook or a Groupon, as those companies were emerging, investing in those later rounds, whether it be on second market or making direct investments, and they've been rewarded for that. And so I think that, if you look across the board, Elevation was a later stage investor in Yelp. Kleiner Perkins took some smaller positions in later stage companies, and they've proven that they could drive returns by doing it. And now they're going to get rewarded by raising another large fund, probably. And most of these funds are actually focused on the later stage investing.
Could be navel gazing at Bloomberg West, but I wonder when these characters become sort of outsized names, Andreessen, Milner, McNamee, he's been kicking it around for a while, but they've become these celebrities way too strong. But on our show they are. Does that make a difference when you're trying to raise money from pension funds and endowments, the principal backers of these venture funds? Yeah,
I think it's interesting. I think you have guys, especially at places, like Kleiner Perkins, who have been investors in a lot of great companies, and Kleiner's famously involved in things like Intuit and Amazon and Google. The pension fund managers want to meet with you and want to talk about what you see next. But the reality of the situation is a lot of these guys are just very focused on returns, and I think they should be, with their constituents being pension funds, whether they be public or private, and it's their job to drive returns. So they're going to invest with the investors, not because they're perceived as rock stars where they spend time on TV, but because they have gotten early into a lot of great companies.
Really, it's all about the money. I knew it. Rick Heitzmann, managing director of FirstMark Capital. Yeah, I'm all for it. Someone's got to retire. Rick Heitzmann, thanks a lot.
Thank you, Cory.
Emily?